DSCR loans for short-term rentals. Hey, what's up everybody? Jeff Trevarthen, Jeff the Mortgage Pro. Thanks so much for watching. I love it when you guys watch my videos. Please make sure you click the like button down below. And if you like all this stuff about real estate that I'm putting out and mortgages, please go ahead and subscribe to my channel. And that way you can see all the videos that I have about mortgages and real estate right now, okay? So today what we're looking at is DSCR loans. I love this topic. These are great types of loans. And in particular, DSCR loans for short-term rental properties. Okay, so in a DSCR loan, DSCR stands for debt service coverage ratio. And what we're looking at is a ratio of 1% or higher when we're talking about the debt service coverage ratio. And it's the money coming in versus the money going out. As long as the money coming in is going to be greater than the money going out, that means that the debt service coverage ratio is going to be over 1, then we can definitely get you a loan for the property. Now, why do I like DSCRs for short-term rentals so much? Because typically that DSCR ratio is much greater than 1. That means that the property is cash flowing significantly compared to what the expenses are in the property. So if you can find a great short-term rental that's really crushing it in the market, that's already crushing it, then you're going to have a really good opportunity to do this type of a loan going forward. So let me give you some ideas of what the guidelines look like for the DSCR loans. And if you have any questions, you can always reach out to me with my calendar link that I'll put down below. And that way we can talk about DSCR loans. So, just a couple things that I've noticed since the financial crisis here in early 2023 with the small banks, the regional banks, and how they had liquidity issues, and the Silicon Valley Bank and the Signature Bank failures, there's been some tightening of credit. So these are not as easy as they used to be. I would say that they're usually, what I'm seeing, the people that are doing these loans right now are a little bit more sophisticated investors, but they are for residential real estate. So if you are a new investor, you could still get one of these loans, but you still have to have a pretty good profile to do these types of loans. So let me give you some of the guidelines that we're looking at. Right now, the minimum loan amount is $200,000. There are some investors out there that will probably go down to $100,000, but I'm not one of them. So if you have a really low priced, vacation rental property, you might need to reach out to somebody else, but $200,000 is about the baseline, as low as we can go for our particular products here at my current company right now. Okay. They do go up to $2 million though. And what I see is that some of these higher priced short-term rental properties cash flow beyond what you can ever imagine. I mean, if we're talking like if you have a $10,000 mortgage payment, you're probably looking at a $1.2 million, $1.3 million mortgage, somewhere in that range. And some of these properties are cash flowing at $30,000 or $40,000 a month because of the short-term rental incentives. So that would be a great example of something you could do a DSCR loan on, and it goes all the way up to $2 million. So if you're, a very sophisticated person, you have plenty of money and cash and reserves and down payment, and you want to buy a $2 million or even a $3 million property and put $1 million down and have a $2 million mortgage, if that property is going to cash flow like you think it is, you could still do this DSCR loan on that property. They're for 3 different types of loans on these: purchases, rate and term refinances, and cash out refinances. And yes, interest rates are higher right now. I typically see these loans, usually 1 to 2% above what a conventional conforming loan would be right now. So that's pretty significant. I think it could be in the 8s and the 9s in some instances for these DSCR loans. But if the property is cash flowing, it's just money, right? Like if you're going to keep doing that going forward, you can always refinance these if the interest rates drop with certain stipulations. So take a look at that, okay? There is no personal income or employment information that is needed on these ones. That's the beauty of the DSCR loan. It's been around for a long time. In fact, in the commercial world, it's been used for 20 or 30 years, but it's fairly new to the residential world. Maybe 2018, 2019 is when I started seeing these coming down the pipe, and now they're fairly prevalent as long as you can meet the minimum requirements here. There's no limit on the number of properties that you have. So this is one of the things that you'll see a lot of investors who have 10 or more single family properties. You're using these types of loans all the time just because Fannie Mae and Freddie Mac may have limits on the amount of loans that you can do through them, especially on investment properties or financed properties. Okay, so DSCR loans, definitely something you can do. One thing to note, you have to do one loan per property. There's no blanket loans for these DSCR loans on short-term rental properties. So make sure that you take that into consideration when you're buying those. They're usually 30-year fixed mortgages. Some of them have ARM products available. Most of the loans I'm doing right now are all 30-year fixed mortgages with these DSCR loans, especially on the short-term rental properties. There's interest-only options available. It depends on your equity position, depends on your credit. Those things are all available, but again, that could be an even higher interest rate than what the market interest rate is on these particular loans. So make sure you pay attention to that. Here's one thing that has changed also since the financial crisis, and that's the amount of reserves that you have to have left over in the bank. And a reserve means that if you just take the principal, interest, tax, and insurance for 1 month, that's 1 month of reserves. So minimum right now is 6 months reserves. Most investors want to see 12 months worth of reserves or more. So that's something to consider. If you're a first-time investor and you have just the minimum down payment, then you're going to make sure that you need to save up some extra money for reserves. It doesn't need to be cash in the bank. It could be stocks, bonds, it could be 401k, IRAs, all sorts of different things are considered reserves, but check with me before you are actually trying to get this loan. That way we can determine if you have enough reserves or not to be able to get a DSCR loan for a short-term rental property. And then up to 75% loan to value. That means you have to have, if you're going to purchase a property, 25% down. If you're going to do cash out, we can go up to 75% of the value of the property. Definitely need to have that. So you need to have 25% down and a minimum of 6 months reserves, most likely 12 months reserves. So you're going to need a little bit of extra cash when you're buying these short-term rental properties. And then first-time investors are okay. So if you have the cash and you meet that credit profile, you're totally fine. Credit score is down to 680, but 700 is preferred. If you're over 700, you're going to get better terms going forward. And here's one of the cool things that you can use with short-term rental properties is non-warrantable condos. And remember, condos are susceptible to litigation because they are, somebody could trip and fall and the HOA gets sued, or maybe there's a structural defect in the property and the property gets sued. That means it's non-warrantable. That means you can't lend on those type of properties traditionally. But with some of the DSCR products, you can lend on non-warrantable condos, especially if the litigation is a trip and fall type of litigation. So you may be able to get really, really good deals on short-term rentals if you're going to buy a non-warrantable condo and it's under litigation. So check with me if you're going to buy one of those and going forward. So one of the things I also wanted to mention too on the DSCR loans, they do have a prepayment penalty. So prepayment penalties existed all the way up until the financial crisis, and they were like, no, can't do these anymore. Somehow, for this particular product and this particular type of loan, because it's for investors, they were able to negotiate some sort of a prepayment penalty in there. So prepayment penalties can be anywhere from 1 to 5 years. That means if you pay off the property during your prepayment period, you could get a penalty assessed on your new mortgage, on the existing mortgage, because you're getting it paid off, and it could be an extra expense. So make sure you consider what that prepayment penalty is when you're going forward on these types of loans. Okay, so DSCR loans for short-term rental properties, I think people are killing it right now with these types of loans. As long as you have a good credit profile, as long as you meet the minimum down payment requirements, as long as you have enough equity in the property, and as long as you have enough reserves left over, you're going to do great with this DSCR product. Reach out to me today. I'll put my calendar link down below and you can get on my schedule, and we'll talk more about DSCR loans for short-term rentals. Talk to you soon.